Not thriving is the wages of many low-income workers in Canada. Now, CIBC has data that show that while we did know that there was a disproportionate hit to low-income workers in this pandemic, their numbers show that, in fact, while that was going on, wealthier Canadians saw their incomes rise. Benjamin Tal, Deputy Chief Economist at CIBC, with us now. Benjamin, this is shocking data in the sense that we thought, okay, because it's this K-shaped, the folks at the lower end in the service industry, hospitality industries, their jobs have gone away. Whatever wages they're getting, they're going to be lower. Your numbers actually show that there's something else going on here that's important from a policy point of view.
Yes, that's fascinating. As you can see in this chart, the left side of the chart was well known. We knew that we lost a lot of jobs in low-wage sectors. We knew that. In fact, we said all the jobs lost were in low-wage sectors. However, we assumed that high-paying jobs were basically flat. And you know what? They are not flat. They are up by 300,000 positions since the beginning of the year, which means that the income gap is much worse than we thought, because not only are we seeing the number of jobs in low-paying sectors going down, but also we see a significant increase in the number of well-paying jobs. That's actually a very interesting situation that we are seeing.
So what does that imply? I mean, we know that there have been supports put in place for those who've lost their jobs altogether, the wage subsidies, other forms of support. What does it imply, though, Benjamin, that we now know that folks who were making a lot before in fact, are making more now? What does that mean from a policy point of view, in your view?
Yes, it's very interesting because, we have been talking about the situation in which the government has been injecting so much money into the system. So income for the first time ever went up in a recession at a record speed. And the question is why? Maybe the government is wasting resources. Maybe yes. But this data suggests that actually most of the decline in the low-wage sectors in terms of income is really not as bad as it could have been, because you see a situation in which high wage are higher. So the headline number is masking how bad it was in the low end of the wage curve. And that's something that we have to take into account, which means that maybe government money was more targeted, because if you remove those high wage jobs from the system, you see a situation in which income among low income Canadians could have gone down dramatically, and that's where you need money, you need the support. So maybe it was more targeted than perceived.
And does it suggest that there is a little capacity on the revenue side for governments that want to raise taxes? Folks whose incomes went up. Now, presumably, there's an automatic, right? There's an automatic increase in taxes when incomes go up. But is there room there to go even further?
Yes, it's not just income going up because of new jobs. Simply, we see more jobs being created in the high end of the wage scale. And that's very interesting. Yes, absolutely. And I think that would be very tempting. We were talking about this cash sitting on the sideline. We were talking about the pent-up demand. We know where the money is, and we know that there is more money where the money is than we thought, because of this huge increase in good, well-paying jobs in technology, in finance, in even health, even e-commerce, in management. So clearly we have seen something that we haven't seen in any other recession. In 2008, all jobs, high-paying, low-paying, went down. Here you see a very, very significant asymmetrical picture, and you're absolutely right. That would be very tempting for governments to actually look at the taxation down the road when we are safely far away from the crisis to raise taxes, and I think they will.
It's also helpful for governments to get a clearer picture, as this data will provide, of where the pain is, of where they can target their support, maybe even further. Does it suggest that maybe we need to even look more closely at very specific sectors and wage components of the economy?
Yes, we have been discussing it for a while now, and I really believe that that's the case. The next stage of government support must be extremely targeted. This data suggests that maybe we haven't been wasting resources the way we thought so, because it was masked by the increase in high-paying jobs. At the same time, we still know that a lot of money is being utilized not in a very efficient way. This stage, the next stage of help over the next 6 months, must be extremely targeted. We simply cannot continue to spend money at this rate.
You know, I want to throw another subject at you because it's come up. It is in some ways unsurprising, but to hear that an incoming administration will be anti-Keystone pipeline, but that it may actually be out of the gate one of the first things that President Biden wants to achieve. We're hearing, Benjamin, that that'll set a sour tone between the two countries. How meaningful do you think it is? I mean, obviously for the backers of Keystone directly, it's meaningful, but more broadly for our economy, for the relationship, do you worry when you hear this?
Not very much. It's not a big surprise. Biden was very clear about it from day one. We knew it's coming. We talked about it a lot, and it's coming now, and he's very serious about it. At the same time, we have to remember that Biden will also introduce a lot of regulations on U.S. energy that, in a very ironic way, will benefit oil sands, will benefit Alberta through higher market share. So, yes, this is not great for Alberta. This is a bad day, and he's going to do it the first day, he said, and he's going to do it. It's going to be negative, but I believe that if you put everything together in one picture, this is a relatively small part out of the much bigger puzzle.
You know, the other piece of the puzzle, of course, has been efforts. And again, this gets to your notion of sort of very targeted support. We've seen the government wanting to target alternative energy sectors. We have this deal announced today, ratified by the union. There will be electric components assembled in southern Ontario. The government will say this is great news. It comes at a cost. It comes with government subsidy of a certain type. Is it the right way, do you think? Because those are, when we look at your wage earning bars, those are pretty high earning, right? They're over there on the $41 an hour plus scale for the most part.
Absolutely, and I think that's the direction we should be going. It's very clear where we are going. It's very clear where the Americans are going, and we have to find our way into their market as well. This is the new growth phase. That's where we are going to see the growth in overall activity. We all know that, so we need to be part of it, and clearly with the Americans now leading the way, we should be part of it. I totally agree with that.
All right, Benjamin, great to have you with us. Always appreciate it. Benjamin Tal, Deputy Chief Economist, CIBC.